Learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your Watchlist coming in at January 12th, 2021, and the stock market was spooky today. And I'm going to be buying one stock based off the news that we need to go over. But today was a wild day. A lot of things happened into the market. It was primarily related to that Trump baby mama drama, but you saw a lot of things today. And why I'm calling it spooky is because the market saw some risks of big tech today. Even world leaders in Germany and France were shocked, but a lot of the political stuff came back today. I think it's noise. We're going to talk about it, but there is a lot of different things happening. So we have a lot to cover. I want to go over what happened today, what we are looking at tomorrow, the plays that we have, and everything else. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watchlist come to life, and yes, we ain't going nowhere. We ain't going nowhere. We can't be stopped now, cause it's big tech for life. And the most important thing you need to do, post a watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So right off the bat, I'm gonna stay on this screen and show you guys we did have a gap down today, and I really wasn't expecting too much political drama today. I was expecting a lot more COVID headlines. We dropped down today. I'll even turn on the pre-market here. You could kind of see how it was. We dropped down. We're even down lower. Bounce back up. The market opened. It went up a little bit, but you didn't see that opening real rush. We did see it in bank stocks, and that was something important to note. If you guys are watching Bank of America, JP, they were the strongest today, and not everything took a loss. Big tech was the real big loser here, and even some tech people won, but there was a lot of reaction to what happened with Twitter banning it. You started hearing a lot more calls for the 25th Amendment, impeaching Trump, and it was really, really, really strong, and you could see that because I talked about this today. You saw a lot of corporations mobilize, whether it was tech saying we're not accepting political ads, all the way down to other companies pulling political donations if they were involved in any way, shape, or form with contesting the electoral college vote, and what pretty much led to the events happening. It was very, very interesting. It was spooky. A lot of people are saying different news, but I think the spookiest part about it was tech dropped 3-4% on some of these bigger names. Google, Apple, Facebook, all of them. You saw Twitter get crushed 8%. This was the biggest thing. So you could kind of see how it played out today. It was very, very even. Again, all of this move just to keep us here, but now coming back to the keys, there was also a lot of other things happen that could kind of be priced into the market. This is what I want to bring up because, again, I think there was a lot of noise here. So at the same time, when you even heard Biden saying it, the vaccine rollout was not that good. So there was a lot of anticipation and hype, but you didn't hear a lot about the COVID numbers as I was expecting today, but a lot of negative press towards how the vaccine rollout is going, and even Democrats and even Biden pressuring to get that running smoothly. And then they also mentioned, Biden said it, stimulus is a priority, but then that Trump baby mama drama took place. So I'm gonna come back here to the chart. You can see it. The market started kind of slipping up. It was doing nothing. There was a report, and we are going to be expecting to hear from Trump tomorrow, I believe, regarding big tech. And the market kind of stood still for a little bit, went up, and then as we started getting statements from Biden, one thing he said before, he said stimulus is a priority, but now he started talking about the impeachment in Trump, and now this is where I think it's going to kind of take a turn here, because as that pressure mounted today, again, a lot of this drama, it really controlled the day. Impeachment news, the response to big tech. I think this is now what is going to kind of scare the market on the secondary sense, besides the fact that tech is a little bit shaky right now, or at least that is my opinion. Pretty much as all of this plays out, this is the next key. I keep saying I think it's a lot of noise. However, regardless of what happens, we need to see how it's going to play out here, because what could occur is pretty much there is really going to be some sort of real big concern in the next 9 days. That's why they're making a push. Otherwise, the market may start to get let down by the efforts, or the lack thereof, of efforts for the stimulus. So even though Biden's saying it's the priority, this is how we're going to see if the administration gets off on the right foot here. But essentially, if a lot of actions get wrapped up around what is going on, or even the past here, and you don't see that stimulus kind of making progress, the market might not like that, because that was something that the market really liked. Now we will see, because again, we have just seen a lot of noise. A lot of people thought this was going to be a one and done event with the Capitol building. It was really bad. There was a lot of fear, but it wasn't expected to really drag on like this. So we've seen this a few times, whether it be the election, the runoffs, where the market kind of responds a little bit, then nothing happens. So it could be noise, and we will see how it plays. I even talked about this today. I have full exposure to everything. We will talk about that when we get into the play. So I personally am not too concerned. That's why I'm probably taking a more laid back stance on this. However, there is a lot of different things going on, and I wouldn't be surprised in the next few days, even after the inauguration, and then even once we get Powell at the end of the month, to see some other stuff develop or the market kind of react to something that we're not really reacting to today. So be on the lookout. It's going to probably be a crazy week. We're going to see. That is our job here. We want to wait and see how it digests. We have our exposure, but you're even seeing the market produce different, not rotations, but there's clear winners and losers. So besides other earnings in the rest of the week and coming into all this, you're going to have the earnings, but you're also going to get industrial output inflation. And if there is anything that is probably going to move the markets and make things kind of go a little bit crazy, it'll probably come from one of these earnings, whether it's banks or any of these other early reporting companies. And if they have any sort of guidance that could pretty much act as a catalyst. So there is a lot of things going on, but you don't always have to do something too soon. It's better to be late than wrong. So it's going to be exciting, but that is pretty much it. So let us get into the plays. So right off the bat, we made a few different plays. I'm only really going to be looking at one stock tomorrow. The rest we've already had plays on. We did make a long-term edition. So if you guys have not clicked that first link for the free long-term chair alerts, I'm excited to say we have got to send out a long-term alert. So we added Coca-Cola to the long-term. I'll go over this thesis when we get to that. But as far as the first play that I'm really going to be watching, I don't think I have any other plays. I'll have to see. We might have some old ones. But there was news today related to Walmart that they're going to be getting into some fintech thing with like Robinhood or behind Robinhood. So it popped after hours, and I'm saying with a lot of noise and a lot of things going on in the market, I like these news plays simply because if the news is good enough, the market could pretty much react to just Walmart itself, and it could kind of isolate itself from some of the other stuffs, or at least temporarily, unless something really, really big did happen. So I will be watching that one tomorrow. As far as the next play, Coca-Cola, that was the first play. I'm going to be watching that tomorrow. I don't have a play as far as everything else. Back to the Coca-Cola. What I'm looking for here is a value reflation. So we grabbed this on the long term today. We grabbed 40 shares of Coca-Cola at 50.33. And if you guys remember, we bought Coca-Cola way back during April when everything was going on. We got it at $43, 25 shares. We got a really nice discount. The yield was high. So I averaged up. In this case, we're still up on the overall position, but my idea is kind of like the Walgreens. So I was talking about this toward the end of the year last year when we made this position, or it was around September, December. We picked up 100 shares on the big long term. I even got 300 shares on the other one, but you can see we're up 30% on Walgreens. This was a 6% yield at our price. Now it's yielding just under 4%, which is insane, but this is what I'm looking for with these plays. So I think it's very important, especially when you see days like today. And Coca-Cola is a little bit interesting, again, just because they got downgraded here in the last few days, but I'm looking for a reflation of a lot of these value stocks or any of these plays that were kind of beat down from like 8 years ago. A lot of the losers that ended up benefiting from the Obama administration, I think they're going to have a lot of upside here. So I like the dividends, especially over growth, and especially with some of these headwinds with tech. So that's why I decided to make it. But I said this on stream, at the end of the day, Coca-Cola is not one I'm really expecting to make a lot on, but I'm not expecting to lose a lot on, and it gives us dividends. So that gives me a nice little deposit here for the month. We got to put it to work and then see what happens from there. So that is the second play. The third play is Asana. I'm still holding this play. It's still looking like the breakout, that IPO breakout, and I like it, and the premiums are finally playing along with it. So what I mean by that is we have this Asana. I still have these December 21st 35 calls, but they depreciated a lot. The fact that they came back to break even in another one, HD was almost positive, I believe, today. We talked about this one as well, too. I still have that on my list. I'm going to be watching it, but this is what I'm saying. I have exposure today. Like, we were able to do pretty good. We have the Baba puts. We have the Facebook puts. We have the Google puts. You guys remember I've been picking those up, but now some of those leap calls like HD, they outperformed today. They closed green. Asana closed green. Zoom puts, they still went down. What I'm trying to show you is that exposure that I have. So I will be looking at Asana. I've just been seeing it today. I kept saying it's my favorite, so I like it. But now in the broader sense, you could kind of see why I'm not really trying to push anything or force anything. So Asana is going to be the third play. And then finally, Abivi. I like this one again for the long term. And now there's a few reasons. It did start shooting up today. Where is it at? Right here. You guys remember that 135 call. It closed at 73%. Was up at like 90% at one point today. But when you come to Abivi's chart, you can see kind of how it moved here. It really outpaced. And then when I showed you the daily, we were expecting a similar move to here. That's what I was looking for, and it looks like it's playing out. But the factor that I really like, and this is why I'm kind of making it a play here, I think it's going to get attention. I'm still going to be holding my play. I'm not going to add to it, but I like the factors that it has going on, and that's simply ex-dividend. So their ex-dividend is on the 14th. That is the cutoff date. You have to own it if you want to receive the dividend, and usually we see a run up into ex-dividend date, then usually on ex-dividend or after, the stock will sell off. So coming towards all-time highs, some of the other news, and now ex-dividend date, I love it, especially how it's been holding up, so I'm still going to be keeping my eye out for that. And then finally, like I said, watch Walmart with that other news. As far as the other stocks, I am going to be watching, again, Google, Baba, all of that. Google held up a little bit, but the fact that these really strongly outpaced, again, Google was down 2%, Facebook was down another 3.6%, Twitter was down 8%, and I think that press conference tomorrow, people are going to see it. So I even said I'm not trying to grab any more of these puts because you guys have been watching. Some are up 5%, some are around break even. We are already positioned in these plays. So this is the benefit of swing trading right there. So I still will be watching these. One thing I will say, if we do get any breaking news developments throughout the day, this is what we're going to watch for. This is why if you're not there, the scream alert, I'm sure there will be some shorter term flips, and I'm not really opposed to taking them. But as we're in this wait and see approach, I like the longer dated puts, or I like longer dated exposure on either side, because it allows you to really play it and not get too caught up in the noise. So watch them, watch Zoom. The fact that they're selling off, remember they had that little bounce up, but it failed through that, and it's still now below that key level. So I do not like the trend and where it's going. And even on that note too, Baba, same thing. The fact that those puts even went up and keep going up, you could kind of see how it's holding up, but I never like to see this chart. I already have a big position. The plays are already expensive. We'll see how it plays out. I'm most likely going to be holding it, but it's clear something's kind of going on here, especially when you see, Neo ended up doing good. They did announce an offering after hours and they got downgraded, but at the end of the day, you've been seeing stuff like Baidu and everything else move. So I really do still think Baba is a risk. I'm probably biased, and again, I have a big position in it, so I will be watching that. I'm going to keep a close eye on it, but like I said the other day, give this one time, whether it's imminent or not. Time is really going to be the key when it comes down to how to play it. Don't get caught up in the noise or the emotion. So shout out to the leaps there. So watch them, watch bank stocks. I'm still holding those JP Morgan plays. If you guys remember, we got those at the beginning about like 2 weeks ago. Those actually held up very nice. They're up 93%. If you could tell, they're a little bit slower moving. I want to see how they play out. I want to see when banks kind of get clapped a little bit, but banks have been the real winner, almost day after day, and even the premium's been holding. So Bank of America, you could see it, but even JP Morgan, they're all moving about the same. So JP is a little bit stronger, but they've all kept up their premium. So as we get into the Fed and everything else, more guidance is what's going to be the make it or break it for them. Like I said, once we figure that out, they're either going to get a green light or a yellow light, and then that is going to pretty much dictate the rest of the story for 2021 in banks, I think. The policy, baby. So watch them. Then I'm going to be watching Airbnb. Again, this has been at that IPO level. We brought it up, but they got some news. I think they might get dragged into the 230 protection. So people are talking about big tech, but there was a price downgrade on Airbnb, and they said that they would have exposure to any sort of liability stuff because now Airbnb would even be responsible for all of the listings posted on their platform. Very interesting interpretation. So I thought that was interesting. I want to keep an eye on it. And again, you've been seeing a weird mix of all these stocks moving. Again, Asana is the favorite one I like, but now even Dropbox came up. They shot up today. Same rumor as weeks ago. I've said this again many times, but the rumor comes out and a lot of people talk about it. This time it was kind of confirmed, or again, just the same story that Dropbox is an acquisition target. So they really outpaced throughout the day. That was when like the news came out. It was rumored, then it kind of got confirmed, and then it just held up for the rest of the day. But watch them still holding those leaps. The premiums are not playing along, and this is what you see here. Again, you could use it as a place marker. I'm still down 11% on these 35 calls. So these have a little bit more time than the Asanas, but still, I thought that was pretty interesting. So again, maybe because it's related to a buyout, but we'll see how that plays out. I still think it's interesting, but not going to get too caught up with the emotions on that one. So watch Dropbox, watch HD. They killed it. The leap snapped back a little bit to life, and this is what I was looking for. Again, they could be a good earnings run up, and we just want to see how they play into the broader scope of growth, value, momentum, and all that. So watch them. Then Walgreens, they killed it. This is just related, and even to kind of give you a visual with the Coca-Cola, somebody even asked, I know they got the downgrade, but I'm looking for underperformers and outperformers and stuff even in the past. And even one thing you could see here, I brought this up, when Coca-Cola was outpacing and it was being this, nice value, growth stock, good dividends, we were buying Walgreens. But now you can see from 2021, Walgreens has been outperforming, and then compare that to Coca-Cola. At the beginning of the year, all it's done is drop. So I said, well, let me get some of the underperformer and balance it out a little bit. But I really do like Walgreens, and now it's getting at a crazy point. It's related to the vaccine and all that, but if it starts getting into some of these higher levels, again, these are slower moving options. We'll see how it plays out, but it might start to go crazy. But I just want to see how they hold up on some of these red days, because this is pointing a lot to where some of the money is going. So I'm going to keep my eye on that. And then finally, the TLT, GLD, UUP. But UUP is very interesting because you saw bond yields drop again today, and I'll show you TLT, but the dollar started to skyrocket, and this could even indicate some fear. If it really shoots up big, I don't like it. I don't like this pop even in general, given everything, but we have to keep in mind that star tightening analogy. But you even see with TLT, rates kept going higher again. So TLT has been dropping. That means rates have been going higher. This is getting back to that move we saw in March. So if you guys even see TLT, this was that move in March. What essentially happened, the yields skyrocketed lower. That's when we made all that money. 550,000, baby. Shout out to the cult. The Fed kind of stepped in. There was a lot of stuff. Again, the market started to bounce a little bit. The yield shot right back up, and then this is near that point. You could kind of see it here again. TLT is reflecting the overall yield on the bond. That's why these levels actually reflect. So then yields hit that high during March, and then they bounced right back up and then sent us into this new rate regime, yield regime, whatever you want to call it there. So this is an interesting level, but again, I've been telling you guys, if TLT keeps dropping and the dollar doesn't break below that 2018 low, that low, and keep going, that's a little bit suspicious. So kind of seen this before, but if you start to see, again, it's starting to look a little vertical, this is going to be the key. People have said, should you buy the dollar calls? I'm not too certain about those simply because there's a lot of shorts on it and there's a lot of things at place, a lot of uncertainty. I don't want to bite into the news, but as you could see, all of this stuff still moves slow. So we will be able to get a clear-cut signal, but it's better to be late than wrong. So that was the main thing that caught my attention. I'm going to be watching that. Watch the VIX a little bit. However, I think bonds in the dollar are really going to show the hand of markets and let us know if there is anything to worry about, but we will see how anything develops. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to listen, baby. Are you actually listening? Did you ask for an explanation? But the code loves you. I love you. And we'll see you in the morning. Let's go.